Good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, March 6th, 2022. Once again, we're beginning that Sunday Globex session with the markets gapping lower, and that is across the board. I've seen that the S&P, the Dow, the NASDAQ, and the Russell all gap lower on the opening for Globex. What does that do, and where are we? So let's dive in and take a look. Again, just to do a quick review, I continue to count the NASDAQ's high at 16,768 as the high for the intermediate five, the primary five, the cycle five, and likely I'm going to be sticking a super cycle wave 3 on top of all of that. And what that does tell us is that we are in that longer term, larger corrective phase that at a minimum, in my view, will be on a cycle level. So we're going to have to do a cycle ABC down just to begin what could ultimately end up being a super cycle degree corrective phase. So we've got a lot of downside ahead of us, but I don't want to get too far in front of that. So initially, what I am trying to count down now is likely a decline that may eventually take us back to the 2020 lows over the next year, possibly, maybe even a little bit longer. But that would be one target area that I have coming up. Now, what the decline has done so far is we have broken below the fourth wave of one lesser degree. So we are dropping in a primary degree decline. And so that already surpassed the fourth wave, which takes it outside of that there's an additional rally to come in the form of a larger degree advance back up to new highs. We broke below 14,367 more than once now. And that would have been the level that needs to be exceeded and hold for the market to continue to move higher. Now I'm going to go back down. So we're in this larger decline. Let's take a look on the daily level. We can see that we have intermediate wave 1 of either primary wave 1 or primary wave A, yet to be determined. We have intermediate wave 2. We're in an intermediate third wave decline. I'm going to drop down to the 4-hour chart. What's going to be inside that intermediate third wave decline? 5 waves of minor degree. And what we've got done so far is minor wave 1. Minor wave 1 took us from 15,260 down to the low at 13,025. Then we did a minor wave 2 correction that took us up to last week's Globex high on March the 2nd, which came in at, whoa, where are we? I gotta pull this open even more. I believe it's going to be right there, and that's 14,391. So we rose up a huge rally, which I think really took many people by surprise and has switched many funds and accounts into believing that we're just going to turn and we're going to continue to go higher. Now, what they may feel after today's gap opening and continuing to move lower, I don't know. In my eyes, we're in a minor third wave down. And how I've now counted this out, I'm going to drop down to that 1-hour chart. And now let's open this up. There's the top of minor wave 2. I've taken this all the way down to the 15-minute chart to count all the internals in here. This does count as 5 waves down to this level, and that's where I'm putting in minute wave 1, right? What's inside that minor third wave? 5 waves of minute degree. Here is minute 1. Here is minute 2. That was the rally up, and actually on an extreme push, it ran to 14,060. On a closing basis, it's going to close way down here at 13,965. It was one of those where somebody just came in and they bought, and it punched up and they punched it down as quickly. But that is where I'm going to put minute wave 2. So now we're beginning to decline in a minute third wave, which again, so it's a minute third wave of a minor third wave of an intermediate third wave. So again, here we are, folks, the 3 of 3 move. As I left it off last Thursday, if we were sincerely being dropping into that, what we need to see is an increase in downside pressure, acceleration more to the downside. What also gave us stronger support is the market failed to break back above the 20, the 50, and the 200. In fact, the 200 is now cleanly back below, this is on the hourly chart, the hourly 200. Now they're all beginning to point down. And that does continue to create a situation where we should continue to see acceleration. Now the gap down accelerated. And so not unusual. So again, we're inside that 3 of 3 move. How do we want to count this? Well, I think that we're going to have to count wave 1 down to here. So sub-minute wave 1, then my sub-minute wave 2. Now that 3 of 3, and that's where we got the acceleration. I would suspect that as the other markets begin to come online, i.e. the Asian markets and then the European markets, it's going to be very news driven right now. We're discussing things on a technical level, but it's going to be really fed by what's happening on the news level. What's happening between Russia and the Ukraine, Russia and NATO, Russia and the US, all of that is into play. There's so much flying around and it is not getting any better. So I would suspect that we're going to continue to see a little switch and that we're going to start to come down. And well, there's an interesting story that there are some analysts who are remaining bullish despite the risk of a nuclear apocalypse. I don't know if I'm going that far about a nuclear apocalypse, but I do think that we've got a lot of switching around happening and that we're going to be dropping before we're going to be really putting in a strong rally. Now, but having said that, my feeling is that we will continue lower. Our next support for this minor third wave comes in at 13,537. Our low thus far is 13,547. And we're within $10 of reaching that 382 level support. If that breaks, we're going to be dropping now on our interior minor third wave. This does come into play as support, but it's support for the larger decline, not this minor. So I'm really looking for it to break there and really head for 13,273. We might get a pause at 368, but I'm looking for 273. And then we should also find support back at 101, 13,101. We know we definitely have support down here, 13,028, 13,058, down to 13,025. Those are all going to be support. The stronger support, those are going to be found underneath it at 13,010. Then I think we break those levels. So it'll be pushing below there and we start to break down. Again, 12,815. Again, we're looking for where can minor wave 3 complete? Well, the 100% where minor wave 3 would be equal to minor wave 1 comes in at 12,156. We have some additional support at 12,198. Now, that is where the intermediate 3 would be equal to the intermediate wave 1. Now, that could provide some support and very possibly complete the minor third. But guess what? After the minor third comes a minor fourth, and we still have a minor fifth. So ultimately, Where can all of this end up? Here we are. We're not, these are now coming into play. For minor 3, and then we have intermediate 3, which equals 618 of intermediate 1 at 10,306. So minor 3 equals 1.618 of minor 2, of minor 1, excuse me, at 1,074. So again, these are not unrealistic numbers when we're comparing on a Fibonacci basis the minor wave 2 to the minor wave 1 and the intermediate wave 3 to the intermediate first wave. That's the level. Now, we've often wondered, how are we going to get down there? Well, I think many people are probably wondering how we were going to get down here when the world had turned bullish, or at least a lot of the investments advisors were turning more bullish. They were bullish because of this. Now, who knows? Who knows what the PPP group have, or what JP Morgan might think, or what Morgan Stanley is going to say, or a lot of these brokerage firms that are merchant bankers, whatever we want to call them, when they start coming out and stocks are extremely oversold. Well, I want to just bring to everybody's attention, stocks can get extremely oversold, and it often, or not, excuse me, that's the wrong word, not often. In the past, that has happened on the day before a major crash. That happened in 1987. That happened at several points in 2008 to 2009. We can continue to go back. It happened in several points during, yes, previously. So this is not an unusual thing. And it's also not unusual to have analysts who say, well, this is all bullish. We're going to remain bullish. And I'm not going to step in front and say, well, I think that that's a mistake. The market will do what the market will do. And regardless of what one analyst feels or another. But if money wants to come in and buy, and they start buying this market, either in the Asian or the European sessions, or again, tomorrow morning when the US opens, and we end up rallying back up and leave 3 waves down, I'm now going to tell you the other side of the coin. And that would be that what we're dealing with is a very complex ABC, series of ABC patterns still to complete minor wave 2. Yes, it is possible. And what would it, how I would count that? Again, if we really start to break down, no, it's going to become more difficult to put that into place. But right now, if we kind of come down a little bit more, halt and go back up, and we start breaking above the 8, the 20, the 15, the 200, it leaves 3 waves down. That could be, again, ABC, X, ABC, X, ABC. So it could turn into a triple. And again, that again feeds into a lot of people telling you that it's bullish. And it will be for about 4 or 5 days until that next roll happens. Now, I'm not saying that that is what is on tab for tomorrow and the week, but we're showing it as an alternative view. If we see the markets start to rally strongly, the buyers come back with a vengeance and they push it above the 8, which right now is at 750. The 20 right now is at 840. The 50 is sitting at 950. The 200 is at 14,025. If it breaks above all of those in one foul swoopy push, we have the makings of a third ABC advance. And this would be counted as an ABC decline wave X, the second X wave, and we get another push up. Now, if this ends up going down to this level, then it's going to be a little tougher to call it an X wave versus a third wave. But until I can get a 3, a 4, and a 5, I have to keep alive the other side of the story. If it were to break below this level, say we do kind of go into a semi-crash, we break below 13,025, no, wave 2 is done, and we're done, and we're into that third wave, period, end of story. But until that time, until we start to break these lower support levels, we must continue to keep alive. But again, what has to take place, this is important, what has to take place, it has to turn and break these moving averages, as if there was nothing but rose petals being strewn across the world. Come on, folks, just walk on the rose petals and join the party. And that's really, in my mind, what it would take to turn things more bullish. Now, again, tomorrow I am looking for lower levels. Pullbacks should be shallow. Now we're inside a 3 of 3. I'd be looking for continued acceleration. If we don't get it, that begins to lean the table towards the other alternate view. So here's what I'm looking for. I'm looking for continued acceleration, breaking below this support, breaking below this minor support, breaking below the more important support at 273. Now, each one may provide a pause. So we might get 1, 2, and the third comes down to here. Then we get a 4th wave, then we get a 5th wave, which may bring us down to here. That may then complete minor 3, get a minor 4th wave and a minor 5th wave, and we're down below 13,000. Okay, I'm going to leave it there. Trade smart. Trade according to what your moving averages are telling you. Trade the price action. Trade the Elliott. Trade the Fibonacci. Use them all. These are tools that have stood the test of time. We can trust them. Make sure you can trust yourself. If it's too fast or it's too volatile and you want to trade the futures, consider trading the micros. You get the same movement, just a lot of less risk. I'm going to leave it right there. Our next update will be on Monday, March the 7th.